In this video, guys, I've got a quick tip for dip buying. Stick around. Hey traders, warm welcome to you. All right, so I want to look at buying dips. Buying dips is a super powerful strategy. It seems really simple. Everyone's like, oh, buying dips, pretty boring. You know, give me some more juicy stuff. But listen, it's a solid foundation. And I know of a trader, at least one trader, who all they do is wait for a dip and buy it, or wait for a rally on the short side and sell it. And they got very, very good at doing that. They scan multiple markets, got a list of markets they look at, so don't rule it out. And actually, you know, it's the cornerstone of many, many strategies as well. Many kind of strategies you add more detail to all come from the foundation of dip buying. So hit the screens in a moment and talk a little bit about dip buying. But the other thing as well, from a mental perspective, which we tend to forget, guys, which is always a bonus, having a mental bonus to a strategy, is that, you know, if the price is ripping up and off and off and off, right, you often think, oh, you know, I've missed this thing, it's gone without me, I need to get on it. It's very simple. When you have a dip buying strategy, all you're doing is saying, you know what, you can go for as far as you like. Keep going and going and going. As soon as it comes back, the criteria is checked for a strong market. I'm just waiting now for a pullback. And the beauty of waiting for the pullback or the dip is that you're not chasing, number one, which catches so many people out, the emotion, if I've got to get in, bang, buying it, and then it calls and it gets stopped out in the dip. And number two, you've got a very systemized approach. Now I'm going to look at some ideas in a moment from a swing trading perspective and a couple of day trading perspectives of, you know, how we can time this dip or this pullback, if you like. So, you know, let's go straight to the screens, guys, and have a look. All right, guys, so well, first I want to show you a couple of stocks, actually. Now, really, my golden rule is this. Let's just skip straight to the golden rule, and I'll just show you some kind of examples as well. The golden rule is basically, the stronger the move, the shorter the dip. And that's really simple, and it works very, very well. As you'll see across stocks, I've got a currency pair for you, S&P 500, same kind of thing. So, you know, the stronger the move, the less the dip. So look at Tesla here. You've got 1, 2, 3, 4, 5 days of green. First red day, the next day, big, strong move. If you're going to look at the S&P 500, when the S&P 500 has been relatively strong recently, this is SPY, by the way, the S&P 500 ETF. I like using this because I can see the gaps for the regular trading hour session. Now, this is not quite as aggressive as, you know, if you look at the line angle, if you like, the trend line angle, and that's not a perfect trend line, but if you say that's the angle there, you know, and you compare that to some other things which have an angle like this, which we'll see in a moment, so you start to say, okay, well, if it's an angle like this, for example, pretty strong market, then maybe I want to wait for 2 days of down move before I start looking to buy on the third day. And if you line yourself up with that, and that's been a very kind of good way to frame your trades on the US indices for a long time, is, hey, 2 days down move, let me look for a buying day. 2 days of down move, let me look for a buying day. Now, you're going to miss some, of course you are, but the idea of this rule, if you like, or this tip, is that, you know, the shallower the trend, the more down days we want. You know, if it's like this and it's slowly moving up, we probably want 4 or 5 down days. In fact, if you go back and kind of look at some of this type of stuff, look, the angle is slightly different here. For SPY, it is almost identically to that. So how many down days are we buying dips on? Yes, we're buying them after, you know, 4 or 5 days of down. 1, 2, 3, 4 there. There's 2 there, but you get the point. As the urgency isn't quite as much as it is when you start to kind of have that line a little bit more sharper. And then you're looking for 1 or 2 days of down day. And if you go to another stock like one of the cannabis stocks when they went crazy, you know, same kind of thing. You know, when they just absolutely ripped up and it was a very strong move, very, very strong. Let's just do this one. Very strong move. Look at the angle of the line. Angle of the line, very, very acute angle, almost vertical. It's 1 day and then it's off again. And so it applies on all time frames. Before we look at, I want to show you GBP in a minute. Let's look at Beyond Meat on the back side of this move. Same kind of thing, guys, but on the downside, you know, good weakness to the downside, very, you know, sharp angled line. Of course, we're only looking for 1 or maybe 2 max up days before it reverses. And that really does, it really is a very simple rule, but it rings true across a lot of stuff. I'll just show you again this very quickly, this coffee. I know coffee again, just literally ripping. solid, 1, 2, 3, 4 good solid up move days. One day you're looking for the buy on the second day then rather than the first, you know, and then again real parabolic move one day and then looking for a buy again. So it works on that. Let's look at GBP because I want to show you on a kind of daily intraday time frame as well. GBP, let me clear off some of these drawings. I've just been analyzing this recently. Same kind of thing, right? The strength of the move is you know, very often the same kind of angle. And where's the one I want to show you guys? Really, I think it was the back side of the move. Actually, it was the FTSE on the upside and the GBP on the backside, because the GBP actually gapped up on election results. So, you know, I'm on a 3-minute chart here, but let's move it to a 5. Let's dial it out a little bit. Same kind of thing. The angle, aggressive angle, 1 5-minute decline. This one, of course, will stop out. This is not a you know, golden holy grail, but it's that kind of thing. Again, the sharpness of the move, yes, it's a little bit different on an intraday chart, but it didn't really incurse back up into this. You've got a few there, a little dive down here, slight little rally here, dive down here, slight little rally here. The difference with the intraday chart, the daily chart, is that obviously the time frame is much more smaller. So going, I just want 1 5-minute candle is not the same as a day, but the idea is that you don't want it, you know, to have lifted back up much. You're not expecting it to move back up. Let's look at FTSE, because this is a really good example of a run up after the kind of election move. You know, same kind of thing, guys. Run up, the dips after the strength is so shallow. Broader, obviously, as you start to get used to that price. But again, this drive here, which was the day after, one little tiny dip, very small dip, and go. So, you know, the real golden rule for dip buying is the more aggressive the move, the shallower the dip. Super simple. Use linear regression if you want to automate it. Use a trend line on there. But really, when it's strength and it's super strength, don't wait for too much of a pullback, because you won't get it. And if you do get it, it might be a reversal. So the rules that you build should be around the kind of thesis that, hey, strength, narrow pullback, shallow pullback. Not so much strength, deeper pullback. Same kind of rules apply, but flipped over. If you've got a kind of shallow trend, don't start buying on the first down day or the first little pullback. Let it rotate deeper, deeply down, and then look to buy. And it's more shallow. It's much more of a slower supply-demand shift. So that's my little tip, guys. I kind of use it regularly for day trading purposes. Also use it regularly for guiding trades for perhaps a couple of days in a row. If you've had a strength, then we've had a couple of days pullback, I'll now look to align long, double bottoms, flushes to the downside, etc. So golden rule, strength of the dip, less pullback. Take care. Bye-bye.